Today, we're diving into the incredible momentum SoFi experienced, breaking past new records and signaling strong investor confidence. We'll explore the role of short sellers, what the options data reveals. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi reaching a new 52-week high of $15.75. This marks another entry in what has become a consistent trend of breaking records. While the stock briefly dipped to an intraday low of $15.08, this pullback lacked any significant catalyst. It's likely that short sellers made an early attempt to suppress the stock, but SoFi quickly recovered, signaling strong market support. Interestingly, broader economic data also played a subtle role today. The manufacturing index for the month came in at 48.8, slightly below forecasts, but still an improvement over the previous month. While this isn't directly tied to SoFi, it hints at a broader market recovery that could bolster investor sentiment across various sectors, including financial technology. Let's talk about the short sellers, because they've been a critical part of SoFi's story. Today, we saw a glimmer of hope for bulls as short sellers returned 634,000 shares. Despite this, 14% of SoFi's free float remains shorted, equating to approximately 149.112 million shares. This persistent short interest suggests a battle is still ongoing between retail investors and institutions. For context, the cost to borrow SoFi shares has remained negative throughout much of the week. This anomaly highlights brokers' struggles to incentivize more shorting activity. And here's an eye-opening stat. Since October, short sellers have collectively lost an estimated $1.3 billion. That's a huge shift in momentum, especially after they controlled SoFi's narrative for most of 2023 and early 2024. With this trend, it's reasonable to expect further short unwinding, especially if SoFi continues climbing. I predict we could see short interest drop closer to the 10 to 11% range in the coming weeks. What do you think? Let me know your thoughts in the comments. The options market has been buzzing with activity. Today alone, there were $49 million in call options versus just $5.4 million in puts, indicating a decidedly bullish sentiment. Approximately 45% of all SoFi options traded today were calls, and a significant number of these were targeting prices above $18 for the following week. This unusual optimism wasn't limited to one strike price. Traders are actively positioning for levels such as $16.50, $17, and $17.50, reflecting confidence in SoFi's continued upward trajectory. This aligns with broader market sentiment, which seems determined to push the stock higher. For the first time in a long while, I took a personal step by selling a $15.50 put today. This strategy allowed me to collect a premium while remaining comfortable with acquiring more shares at this price if SoFi dipped below it. It's a calculated bullish play underscoring my confidence in SoFi's momentum. Additionally, the secondary market data speaks volumes. During after-hours trading, massive transactions were recorded, including one valued at $26.9 million and others exceeding $1 million. These large purchases suggest that institutional investors are continuing to accumulate SoFi, recognizing its potential as a game-changer in the fintech space. Many investors eagerly await quarterly 13F filings, which disclose institutional trading activity. While these filings are delayed, they provide valuable insight into trends. For example, in Q3, Barclays increased its common stock holdings in SoFi by 5.4% and boosted its call options by 1.7%. Based on recent market activity, it's highly likely that Q4 filings will show even more aggressive buying. Imagine major players doubling or tripling their positions. This could solidify SoFi's status as a top-tier fintech investment. These filings, expected in late January or February, are worth keeping on your radar. Recent analyst updates further validate SoFi's bullish case. Mizuho Securities issued a $16 price target, reiterating its buy rating. However, not all analysts are on the same page. Some hold pessimistic views, such as Compass Point's $4 sell rating. These outliers are becoming increasingly irrelevant as SoFi's performance outpaces their expectations. It's worth noting that analysts with poor track records, like those at Wedbush, may struggle to justify their bearish calls. SoFi's fundamentals and market performance are proving doubters wrong, and this trend will likely continue as the company grows. Conclusion: SoFi is undeniably one of the most exciting stocks in the market right now. With strong technicals, overwhelming options, market optimism, and institutional buying, the case for continued growth is compelling. Short sellers are retreating, large investors are doubling down, and the broader market seems to favor fintech leaders like SoFi. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.